I am Manager Cashless Economy and Financial Inclusion with the TTIFC. And we're really excited to host this event today because it touches on one of our pillars, financial inclusion. Now, at the end of today's session, we're hoping to better understand the rules of the Financial Action Task Force, the revised travel rule, which can adversely affect financial inclusion because of its stringent requirements, and the implications for non-compliance. Interestingly, the task force, they conducted a survey in 2023, and what the data suggested is that 50% of economies did not start implementing the travel rule since its rollout 4 years ago. And the main challenges that they suggested are they just don't know how to conduct the risk assessment. And the risk assessment is fundamental for implementation. They don't know what methodology to use, and they're confused on the regulatory approach and how to manage virtual assets. So with that being said, today we're going to discuss some challenges and possible solutions collectively. We do have our subject matter experts, our keynote speakers, as you can see with us online, who will take us through this journey. However, at this point in time, I would like to introduce Ms. Helen Bradstein, UNCDF Regional Head Caribbean. The floor is yours.
Thank you, Shanaz. Good morning, everybody.
Good morning.
I'm delighted to welcome you all to this very important webinar entitled Balancing Integrity and Inclusion, Navigating the FATF's Revised Travel Rule. And I want to extend a warm welcome to our distinguished participants, including representatives from financial regulators, the Central Bank, the Ministry of Digital Transformation, the Ministry of Finance, our colleagues from the European Union, the TTIFC, UNCDF, and our audience that's tuning in globally and regionally around the world online. At the United Nations Capital Development Fund, we stand ready to support the cause of financial inclusion as we believe it helps to reach the UN Sustainable Development Goals. And our focus here in the Caribbean is to help governments as well as policymakers in the private sector through technical assistance, public-private partnerships and investments, grants, and also private sector development. And our hope is that UNCDF can be a useful tool and a resourceful ally, as the TTIFC like to say, but also a tool and a partner to all of the governments here in the room to help develop comprehensive financial inclusion strategies, approaches, and agendas to enable an inclusive financial sector across the Caribbean region. As the global financial regulatory landscape evolves, it's imperative that national policies and regulations adapt accordingly. And this webinar in particular is designed in collaboration with our esteemed partners, especially the TTIFC, our partners here on the call from CGAP, from different consultants and thought leaders from around the world, to initiate a global discussion with everybody here in the room, as you guys are the representatives who will have to start to grapple with some of these policy implications. And to also discuss the implications of the revised FATF Rule 16, known as the Travel Rule, and its implications across the Caribbean, and understand how it can apply from the Caribbean perspective. So we hope that today we can explore the opportunities, challenges, and impacts that this rule will have on financial inclusion, access to finance, and also how its application and what are the considerations as it regards to the Caribbean. So I'm very happy to introduce our esteemed speakers today. It's my pleasure to introduce a very esteemed colleague and thought leader at CGAP, Mr. Ivo Janet, Senior Financial Sector Specialist at CGAP. Another thought leader who I have not had the privilege to meet in person, but I'm so happy to see him on the call today, Mr. Louis D. Coker, Professor at Law at La Trobe University. And lastly, for those in the room, the famous Mr. Mehmet Percy, an AML CFP specialist and e-money specialist as well, and a consultant and expert who advises with the IMF, UNCDF, World Bank, CGAP, and others. So I'm now happy to hand it over to our first speaker, Mr. Ivo Janet, who will guide you and guide all of us through this initial presentation. And you are in very good hands. So thank you all, and I look forward to productive and enlightening session. Over to you, Ivo, and thank you in advance.
Thank you very much, Helen and Shanaz, for the invitation, for hosting this event, and for inviting me. It's a great honor to be in this event and speaking to the very distinguished audience. Of course, as you can imagine, I wish I could be there in person, but fortunately, due to technology, we can still do this webinar while I'm in DC, Louis is in Australia, and Mehmet is in Germany. So that's amazing, I think, in its own regard. Now, I have this privileged role to introduce CGAP and introduce the topic, and then hand over to the really deep technical experts on the topic, my colleagues Louis and Mehmet. So if we can go to the next slide, I'll just say a few words about the organization I represent. So on the next slide, you will see that CGAP and one more is an organization that is focused on financial inclusion. One more slide, please. We do a lot of research into how we can advance financial inclusion, especially due to or through innovation and technology. Our vision is responsible and inclusive financial ecosystems that enable green, resilient, and equitable world for all. And as you can imagine, the rules around anti-money laundering and terrorist financing are both a barrier and enabler in that mission or achieving that mission. And very often they are actually a barrier, because we know that when it comes to financial inclusion and people onboarding and access to financial services, identification and ongoing KYC is something that is not as easily done for low-income customers who represent relatively low profits for financial institutions, but may represent a high compliance cost, which is also the reason why we are here today. On the next slide, you will see that for CGAP, the journey around anti-money laundering and terrorist financing or counter-terrorist financing requirements has been a 2-decade journey, which includes many interactions with the Financial Action Task Force. It all dates back to 2000s, where, and I will say we, but it's really Louis and others who have been involved in this for a very long time, identified the tension between integrity and inclusion objectives, and started working on understanding the dynamic between those two different objectives and how they may be creating synergies or trade-offs depending on how policies are crafted. And that all translated into recognition by the Financial Action Task Force of the complementarity principle, basically recognizing that the more financial inclusion there is, the more integrity there could be in the markets, because the more people use financial services, and especially digital financial services, the harder it becomes to launder money or finance terrorism. I'm simplifying that, but that was a big milestone in recognizing that the tension actually could be a positive complementarity rather. And then it translated into a set of guidances that talk about the financial inclusion in the context of AML-CFT agenda, revised several times, and I'll come back to that point a little bit later. So we are now at the point where FATF is reviewing 2 fundamental recommendations, and one we're going to discuss more in detail today. That's recommendation 16. But the other one I will mention very briefly, which is the fundamental recommendation 1. And I'm speaking to very attentive audience. I know that because the region has been hit pretty hard by the de-risking phenomenon. And so you know that AML-CFT rules can have quite consequential, can be quite consequential for the markets and for financial inclusion, of course, as well. And the recommendation 1 is effectively the one that sets the tone for the AML-CFT implementation, and that is meant to allow for application of AML-CFT rules that would prevent de-risking, ideally. It's the recommendation 1 that talks about the so-called risk-based approach and gives I would say, license to policymakers and financial service providers to implement simplified due diligence, to apply exemptions to low-risk customers. And these are important, and therefore these are important recommendations to read together. The recommendation 16, but also the recommendation 1 and the whole other suite of FATF recommendations. And so again, I'm in this privileged role to introduce the session and also make an appeal that while you may be the convinced and attentive audience, it is very important for you to also try to mobilize others who may not be paying attention to this very unique opportunity to influence what the recommendation 1 and recommendation 16 will say, because what it will say eventually will have impact on billions of transactions and billions of customers. And so the moment is now to really share experiences, try FATF Secretariat and FATF members to understand where the challenges are for financial inclusion, and try to craft those recommendations in a way that is more conducive to the financial inclusion efforts. And that will require not only us in the room and on this webinar, but really the whole financial inclusion community to raise the voice and try to, in a constructive manner, influence this whole process. So again, while it's great that we have so many people here, there are many more people out there who may not be paying attention but should be, and that is my appeal to you today. And with that, I will hand over to my colleague Louis de Cocker, who will guide us through what is at stake and what is actually being proposed. Louis, over to you.
So,
Ivo, I'd like to hand to Mehmet to start off this discussion.
That's fine.
My mistake.
Thanks a lot, Ivo. Hi, everyone. Good morning and good afternoon, good evening, depending on where you are right now. And I know there are many participants from different time zones around the globe. And thanks a lot to UNCDF and TTIFC for the invitation and setting up this timely webinar. It's great to be part of this event. Can we go to the next slide, Annie? And to maybe slide 9. It could be a little bit slow. 2 more. Sorry. Okay, let's start with some details. So the previous slide actually. So one of the important questions is why there are some revisions to recommendation 16 and why now? So recommendation 16 was adopted just after 9/11 attacks in the past. And it was adopted to increase the information, the data that accompany wire transfers. And after more than 2 decades, after more than 2 years of the adoption, the details of the recommendation 16 are not really fit for purpose anymore. And for the last 20 years, as you know, so much happened in the financial sector, including the digitalization. And also the process of revisions, recommendation 16 revisions can be considered as a sub-part of G20 CPMI cross-border payment program. And that program has, this CPMI cross-border payment program has several objectives. And one of the objectives is to increase transparency in cross-border payments, but cost efficiency and I can say inclusivity are also objectives. Yes, recommendation 16 revisions mainly aim to increase transparency. This is very welcome. And FATF is also interested in increasing the amount of data on the originator and the amount of data on the beneficiary to accompany the payments and payment messages. And I can say that data is intended to serve a number of purposes. For example, it would work for law enforcement and financial intelligence units, etc. And I can say it also aims to support compliance function of the FSPs, financial service providers, dealing with such transactions, let's say wire transfers. Next slide, please. So let's get to the scope of the revisions related to card payments. This is one of the revisions, main revisions in the recommendation 16. So currently in the current text, there's an exemption for credit card, debit card, prepaid card transactions, as long as those transactions are done, are employed for the purchases of goods and services. So but it's important to highlight that P2P, peer-to-peer, person-to-person transfers using cards are not exempt, and it fully falls under recommendation 16. And for this transaction, it's sufficient to ensure that credit card number accompanies the transfers. And the problem that the FATF identified is that card-based transactions are often abused for money laundering and financing of terrorism risks. Therefore, they propose two options. Option one, as you see, ring fences the purchases of goods and services from merchants. And in this case, only the card number and the name of the name and the location of the issuing and acquiring financial service providers should accompany the transfer. And the merchant is specifically defined in the revisions, and it's actually fairly broadly defined. It includes any businesses, any professionals, like even nonprofit or public sector entities, associated with the regular provision of goods and services. But the revisions then define merchants as entities which was onboarded by the relevant financial service providers as such, following the required CDD, customer due diligence, related to such activity. But I can say these days, merchants may not be onboarded by the financial service providers themselves. They may be onboarded by the, I don't know, third-party providers, third-party non-financial service providers, or I don't know, they may be onboarded by other fintechs through some sort of outsourcing relationships, some sort of third-party relationships, etc. So the question is, in this case, what requirements would apply? This is one of the questions that needs to be raised regarding the revisions. And also, there's another question, so what sort of regime should apply to like micro entrepreneurs, small businesses who are merchants, but who often do not make a distinction between their like personal finance and business finance, and where these businesses use the same account for both purposes, for both financial purposes and personal finance. Also, another problem is in the definition of merchants. So the revisions refer to regular provisions of goods and services. That's okay. But then the question is how it would impact, for example, like farmers who may only supply goods and services on an occasional basis or on a cyclical basis. So, and also because of the regular provisions of goods and services phrase, there's another question: how would this impact platforms workers, I don't know, artisanal workers, etc., because their work may or may not be interpreted as regular provision of goods and services, and this needs to be clarified in the revisions. Option 2, let me come back to the option 2. Option 2 builds on option 1, and this option also removes the exemption of withdrawal or purchase of cash or a cash equivalent. And as you see on the slide on the option 2 below, the second and third bullet points, recommendation 16 will apply where card is used to make a cross-border withdrawal, for example, from an ATM, regardless of any value. And also, recommendation 16 will also apply to the situations where the card is used to make a domestic withdrawal or purchase of a cash or cash equivalent value with a value over 1,000 USD or over 1,000 euro. So this value, this limit actually applies to domestic withdrawals. And there's also the use of, so now in the revisions, there's also the use of cash equivalent concept. This is new, and which is not really fully defined. But for example, this could apply the situation where the cards is used to buy cryptocurrency or crypto assets. So we will see what other things fall under the cash equivalent concept, which may have inclusion impact. So the definition of cash equivalent should be clarified. But the rule on cross-border withdrawal, on the other hand, can potentially impact refugees. It can impact migrant workers who receive their payments in the foreign country. And this could impact this segment. I don't know if these people, these migrant workers and refugees, return to their home country and want to use local ATM to withdraw money while money is held in an account where they work, where while money is held in an account in the host country. Next slide, please. So there are many changes in the recommendation 16 and in its interpretive note, but it's important to consider all of the proposed revisions with some of the definitions. And one of the updates is that the use of wire transfers is being changed, and this term will be replaced by payments or value transfers. So the wire transfer terminology will not be used anymore. Instead, it will payments or value transfers will be used. Next slide, please. So you are familiar with this de minimis exception. It's part of the recommendation 16 from the start. So since from the first version. So countries may allow a de minimis threshold for cross-border payments or value transfers. So basically excluding anything involving amounts like under 1,000 euro or 1,000 US dollar. And under this threshold, financial service providers might only be requiring lighter information, like simplified information, like, for example, name of the originator, the name of the beneficiary, and account number, etc. And under the threshold, these information do not have to be verified unless there is a suspicion of money laundering and financing of terrorism. However, regardless, countries may require incoming cross-border value transfers and payments below the threshold to contain required and accurate originator information. So accurate is the term that FATF uses in this recommendation to refer to verified information. So let me stop here and actually let me give the floor to Professor Louis on the richer customer data and more. So he will enlighten us on how the data requirements will be changed in the recommendation 16 and what risks could be arising from all those. Over to you, Louis.
Thank you so much, Mehmet. Next slide, please. Now, Mehmet provided a very good introduction to the broadening of the scope. I'm focusing on the specifics regarding richer customer data. Now, when this recommendation was first brought in, and it was part of the special recommendations adopted in the weeks following the 9/11 attacks, the main purpose was to make electronic transfers more transparent. So there was a focus on increasing what is known to the parties in the payment system about who's sending and who's receiving the money. The terminology used is originator and beneficiary, but it's basically the parties on both sides. And what was required, and is still currently required until changes take effect, is the name of the parties, the account number, or a unique transaction reference number if an account is not involved, and then specific identifying information about the originator, and these were in the alternative. What FATF is consulting about is to make those data fields richer by unpacking them and requiring them not as currently set out in the alternative. So to start on the right-hand corner, the name will become the full name, which in most countries won't have much of an effect, but in some countries could have, depending on cultural norms regarding what full name means, could have a fairly big impact. The account number or the unique transaction reference number, that remains the same. But that brings us to the fields that are now unpacked from one in the alternative to three different fields of information, depending. Firstly, address. And address has been sensitive for many years. FATF does not in recommendation 10 require specific information to be collected or verified, but practices developed, and residential address information has had a particular exclusionary impact. So here in this recommendation, it is listed as a mandatory field, but in the alternative, and the wording used is in the absence of an address, then it's sufficient to put down the country and the town name. Now, it's an interesting question immediately in the public consultation. What does absence of an address mean? Because many people have addresses. Do they mean you don't have an address where the addresses can be captured easily in the international postal format? You still have an address, or are only people who are homeless and indigent without an address? That will need to be clarified. But for many remaining people, on the one hand, country and town name may look like a good alternative, but what if you are in a deep rural area? This assumes you have a town, and the same might be the case for some island populations. They may not be specifically a town, they may be an island name. Currently, that is not being accommodated for. Then, if you are a legal person, And legal person is defined not in the normal legal way. FATF has a broader definition. Anyone who is basically not a natural person is defined as a legal person as long as that entity can open an account. In that case, you need to collect the business identifier code, which is a code that's only available to the members of SWIFT. So it's basically the banks and a few other very, very large global institutions. So that's not generally available. The next alternative is a legal entity identifier, or the last one, and I'll return to the legal entity identifier, is the unique official identifier. So for example, when you register a company or register your name in a business register, that registry number would be the unique official identifier. But if that is not available, then you would need a legal entity identifier. This is offered under a new scheme supported by the G20. It's a unique number. It needs to be applied for online, and it costs money to obtain. And it costs money to maintain every year. The registration will need to be updated. So that is potentially a costly alternative for small business. I checked the current lay register. It's open, it's public. There are 79 entities from Trinidad and Tobago registered at the moment. I don't know how many else will need to be registered and what the costs will be. Lastly, if you are an individual, then what is required is your national ID number or another unique official identifier. That could be your birth registration number if the country does not have a national ID system, or your customer identification number, which might be problematic because in many cases you can only become a customer if you can be identified officially, which might mean that as a non-customer you would not have that number. Or lastly, your date and place of birth. Now that sounds easy, but we're working with a number of countries where the simplified due diligence requirements does not require that information to be collected. So a number of these fields are really challenging and posing questions from an inclusion perspective. And there's also an option too in this case, and that is to require this information not only for the originator, but also for the beneficiary. Next slide, please. Very briefly, some of the concerns arising. Next slide, please. Thank you. Firstly, these will be the rules laid down in the standards, but how will banks respond? We know that banks are conservative. We've been dealing with over-compliant practices. We've been researching that for close on 2 decades, or gold plating, where they go beyond the law. So it's all very well that there are alternatives in the standards, but we know many banks will go, as they have in the past, we're not going to choose between alternatives. We want all of it. What will FATF do if they see that happening? In the past, we've seen that they are concerned about it and they issue guidance advising that it shouldn't be done. And unfortunately, the impact of that guidance has been minimal on these practices. So before the requirements are increased, it's important to have a plan in place when we see this behavior continuing. We also need further information about cost impact. FATF is concerned about the cost impact of all of these proposals. They want more information, but they want information about the impact on the big banks and on countries. We're interested in the impact on small businesses. We're interested in the impact on users at the ground level and the coal face in different regions across the world, and very specifically in your countries and your region in the Caribbean. Next slide, please. Now, in addition to these concerns, there are broader data concerns. Privacy and data protection. We will have personal information that's now richer, basically leaving institutions, going domestically and going cross-border. We're already dealing with cyber offenses. We're dealing with cyber fraud, identity fraud. Will this not end up, instead of kind of protecting us against crime, actually feeding fraud and cybercrime? And what about data minimization? This has been one of our key strategies to protect privacy and protect us against cybercrime. We are currently seeing around about 45 million SWIFT transactions per day, around 2 billion card transactions per day. If we're going to have richer customer data in connection with those transactions, we're not heading in the right direction where we minimize the data that is sensitive. We will have an explosion of that. And what might be the unintended consequences of that? Next slide, please. And perhaps in conclusion from our side and leading into the broader discussion, this is a wonderful opportunity, actually. Generally, countries have to respond to FATF standards. This is still a collaborative process to determine what these standards need to be. And in order to inform that process, it is important that FATF has as much information at its disposal, coming from different regions, coming from the smallest countries that might be most exposed to possible negative impacts. This will provide us with an opportunity also to engage FATF about what they want to achieve. We understand their objectives, but are these the best ways to achieve those objectives? Might there be other alternative approaches that serve those objectives best, especially when we have a better understanding of how this may play out in smaller countries, and also when we have a better idea, drawing on the expertise of people on the ground in those countries, their supervisors, their regulators, their institutions, about what the costs and the impacts will actually be. With that, moderator, I'd like to hand to you. Thank you.
Thank you very much, Louis. Good morning, everyone. My name is Annie Bertrand. I hope you're also hearing me in the room. I work with the UN CDF, and I will be moderating the Q&A session at this point. So first of all, Louis and Mehmet, also if you can bring back your camera on and remove the presentation, guys, we'll open the questions to three of you at the same time. But what I'd like to do is to really bring more Caribbean context into these issues to help us better understand the implications for us. So at the beginning, Mehmet, you talked about the issues, the impact of this revision on remittances. Or, you didn't mention remittances, but you mentioned the migrant workers, and you also mentioned the $1,000 threshold. Can you give us a better understanding of what does that mean really? Like, so you have a Caribbean person who works in the United States, open a bank account in the United States, then move back to the Caribbean and wants to have access to the money. What are really the implications more concretely? Because in your blog, I realized that you had like specific examples of what it didn't mean for Caribbean people. And if you can give us a little bit more understanding of the implications and how does that align with the risk-based approach?
Thanks a lot, Annie. Okay, let me start. Thanks for the question. Let me go back to the recommendation 1. So FATF's recommendation 1. Recommendation 1 is one of the most important standards in FATF's 40 recommendations. And by the way, as Ivo mentioned, so now recommendation 1 is also being changed. Now it's the community is in the middle of this process. So again, but according to recommendation 1, countries and financial service providers should conduct money laundering and financing of terrorism risk assessment. And using these assessments, financial service providers can apply simplified measures. where there is a lower risk. For example, if there is a lower risk customer segment or lower risk product, financial service providers do not, they don't have to apply the full measures, and they can come up with simplified measures. And we already observe in many countries regarding the customer due diligence implementation. But as you mentioned, there is this de minimis threshold in recommendation 16 on the payments and value transfers. This is how we use it right now. So that's good. That's great. But it would provide a measure of relief. But still, there is a need for proportional concessions are required to accommodate other lower risk situations. Okay, there's a threshold, but there could also be lower risk situations. For example, where the lower risk entities occasionally need to make some kind of payments above the minimum threshold, above the threshold itself. Let me give an example. For instance, small businesses like micro businesses, including farmers using mobile money, using electronic money, and engaging in a cyclical business. So basically, these small businesses need to make high value payments irregularly on an occasional base in a cyclical basis. So, and the revisions might need to consider this segment of the customers also. And also countries, I can say, have this flexibility because of the risk assessment coming from the recommendation 1. So countries and financial service providers can still do that. And more generally, I can say the minimum exemption, this threshold, may divert some attention from the need to apply proportionality more constantly. What I mean is, it may divert attention from the risk-based approach and applying measures based on the risks. So sorry if it's too long, but let me stop here.
That's very useful. So I have 2-3 more questions to ask you, and then we'll turn over to the room to see if the regulators in the room also have some questions. Because clearly in the Caribbean, the risk-based approach is something that is obviously allowed in most regulations, but it's not necessarily something that is implemented by financial services and financial institutions. I'm curious about the merchants. This new definition of merchants, because in the Caribbean already about 80%, even more than 80% of MSMEs, micro, small and medium enterprises, do not use digital payments to process transactions at this moment, because obtaining a merchant account is already extremely difficult in the Caribbean financial system. Now, how is this? Will this revision make the access to merchant account even more difficult given all these new revisions? And what can we do to prevent this overcompliance or this gold plating, as Luis mentioned before? I don't know, any of you can take it.
I may respond to the gold plating, and I'll leave the merchant definition to Mehmet. Interestingly enough, although worldwide we are really struggling to implement the risk-based approach, Recommendation 16 is actually rule-based. The richer customer data will be prescribed unless a country opts to implement the de minimis option, and it's optional for countries. So it's actually a bit of an outlier in terms of FATF's risk-based approach. Ideally, this could all work better if FATF itself built more of the risk-based approach into Recommendation 16. That could loosen up the current kind of two-tier process of either you're within the de minimis exception or you're into the standard rule. That will then leave us with a dilemma that we all face with a risk-based approach, and that is to assist institutions to do the risk assessment properly. What is currently kind of gold plating is often due to a very conservative view of risk for a number of reasons. One is still institutions struggle to understand crime risk. Governments struggle to understand crime risk, but when they think they do, they feel it's so sensitive they can't tell institutions about it. So we still have national risk assessments with key components that are locked behind doors and that are top secret. And yet we expect institutions to confidently manage risk and identify lower risks while working with a government who has, in a sense, the deck of cards in front of it and who knows where the risks are. And as a result, it's fairly reasonable for institutions to respond more conservatively to the risk. We need to address that. We need to improve that through collaborative public-private partnerships on crime combating. We need better data flows. We need better risk assessment methodologies. We know what countries do and what institutions do are often not sufficiently independent and professional to lead to results that they can use with confidence. We need to improve that. We know how to do that, but it's just not being incorporated appropriately. So there are things we can do, and there are things we can do in relation to recommendation 16 also, and that brings us to the merchant definition. And my feeling from the public consultation process has been that FATF has woken up to some of the problems with the merchant definition, and the fact that Visa, MasterCard, the card systems have their own onboarding processes of merchants. And that might be adequate and sufficiently adequate that we don't need to ring fence a specific definition of merchant within the FATF recommendations too. Is that also your impression, Mehmet?
Thanks, Louis. Yes. About the definition of the merchant, yes, I agree with Louis, and even in the current version of the revisions, it says it's defined as onboarded by the relevant financial institutions as such, following the required customer due diligence related to such activity, etc. So even in this case, there is still it gives some flexibility to the financial service providers to benefit from the risk assessment, from the risk-based approach, and using these assessments, financial service providers can apply like simplified measures where there is a lower risk merchant, or if they are planning to do like limited stuff. So the FSPs, financial service providers, can categorize them as low risk, and they can apply the lighter simplified customer due diligence. So again, I'm going back to the recommendation 1 and its importance. Thank you.
So can the regulator play a role though in helping the financial institution define what is lower risk? Because when it's ambiguous, they just don't do it and don't bother. But if the regulators take a stand and say this is in our country what we consider lower risk, then that would be useful, isn't it? Okay, great. Yes. So I just have
sorry for interrupting. So this is a great addition. Thanks so much, Annie. I used to be a bank supervisor in the past with the Turkish Banking Regulation and Supervision Agency. And as a past supervisor, I need to highlight that there is also a role for supervisors in all this picture. And as we mentioned, even the AML CFT regulations do have the flexibility in applying the rules and provisions. And the financial service providers might have a tendency to apply the stricter rules, but in many cases this is due to fear of supervisors. So what I mean that financial service providers might be very worried about the on-site and off-site supervisors. I don't know, will criticize them, will impose some penalties, etc. So that's why it's important for supervisors to consider the flexibility in the regulations. And also, as you mentioned, the supervisory authorities, the financial authorities might even need to provide some guidance to financial service providers how to apply these measures in recommendation 1 and recommendation 16, and how these financial service providers can benefit from the flexibility in AML CFT regulations. To sum up, it's not enough to have the regulation in flexibility. It's also about how supervisors supervise the flexibility in the implementation. Thank you.
I
Very
just
good.
want to add to it because
Yes.
Mehmet used to be a supervisor. I used to be a compliance officer. So I was on the other side of the story that Mehmet is describing. And I can tell you that the problem we have in financial inclusion is the lack of incentives to really be creative and apply those proportionate measures. Simply because if there is a business case and you're a compliance officer, then you may be empowered and encouraged by your shareholders, by your C-suite, to kind of interpret the rules more openly because there is a business case. But for lower income customers, the business case is so much harder to make. And so it's so much easier to default on the stringent rules because there's a very little money to be made. And so then you say, okay, we just completely exit that specific segment, which is precisely what we've been seeing with de-risking. So just to reiterate this story that Mehmet is telling. And then for the merchants, the issue we have is that the definition of merchant is very flux in the digital economy, where everybody can be a merchant from one day to another, participating in e-commerce platforms, participating in different platform-based businesses. And so it has, we should all be very careful, and especially FATF, in defining what is a valid and a definition that would stand the test of the time in such a fluid environment where, again, what merchant means today may change completely tomorrow with new technology, new business models, and so on. So let's keep that in mind as well.
Great, thank
Thank
you.
you.
Yeah, Elena, I think I'll turn it over to you because the time. Thank you so much, gentlemen. Go ahead.
Yes, so I wanted to reflect a question that we're getting in the chat as well, which I think is an interesting one. And then we'll open it up to the room as well. And then if there's no more questions, then we'll go back to our structured Q&A. But somebody asked a question in the chat, and thank you to Mr. Mohammed Muse for your question, which sparked some other internal implications. So I think one question in the room would really like to understand, both here in person and remotely, is really what these implications mean in the context of the Caribbean, a really clear and candid perspective. In the Caribbean context, there are 3 elements mentioned in what was raised in the chat. Disasters, where these large sums of one-off money is being sent as remittances, typically not crypto, but just general remittances to those who might need that one-off sum because of a disaster, a shock, or flood, or hurricane. And they might not be able to meet those customer due diligence requirements. What are the real implications for the Caribbean islands and to some extent the Pacific Islands as well, who suffer from the same in those contexts and the solutions? And then the other one was around the same question around the real solutions and the implications. What are the candid implications for the economic migrants that are coming here from other countries or coming across the Caribbean, who are then are fully undocumented and unable to open these types of accounts, but are sending volumes of money back home to their home countries to support their families and the implications there. And then the last one is around the implications of the cryptocurrency, because there is a proliferation of those using crypto in some senses as a means to not circumvent, but because there's complications with foreign exchange across all of the islands. And there's not yet that harmonization with the currency as well as the regulations to make it easy to transact across the different islands without having to go to USD first. And cryptocurrency is coming there as well. So we wanted to understand really what is the candid perspective on this rule in those areas that are very relevant to the Caribbean. And what are the solutions that you're recommending, especially as some of the definitely the virtual asset providers, I would assume, and certainly some of the financial institutions as well, are not going to be able to comply. Maybe I'm wrong, but might have a hard time complying with some of the technological requirements that might be needed to then satisfy the compliance of this. Thank you. And then I'll open it back up to the room, and then we'll go back to the chat questions.
Shall I perhaps jump in? And I think I'll deal with the first two questions. I'll leave the crypto and VASP comments to Mehmet, and to think how to approach it while addressing the questions around disasters and economic migrants. We are working with very similar issues and de-risking in the Pacific. And it would be very important. We've had a couple of discussions with the Pacific Island Forum here to also reach out to Caribbean counterparts to have regional discussions. There are some promising developments at the moment on the cards in our region. But in essence, I'd say that the solution to both lies in the risk-based approach. But in a risk-based approach where the regulators play an increased role. Bear in mind, when we speak about disasters, we've just been through a worldwide disaster with a pandemic, and we've seen in country after country the rules regarding KYC and access to financial services changed to respond to the rule. And I think there's a challenge with climate change to all governments of countries that face enhanced risks to ensure that appropriate mechanisms are in place to address disaster and disaster-related payments. That can be created. We've already have the examples of how that could be done, and what was done was approved. So that's the disaster scenario. We've also seen a lot of work done on forcibly displaced persons for whatever reasons, refugees, but that also includes economic migrants. And we've seen similar adjustments of rules made. The key to that is an appropriate risk assessment. An appropriate risk assessment with a conclusion and identification of what amounts to lower risk within that group, if not the group as a group, informs the actions that a regulator can take to simplify requirements. And we have seen the nod given to tiered-based CDD, which in some cases do amount to a rule-based, regulator-led approach to simplified due diligence. So I'd say there is quite sufficient space for governments to address these particular key points, and assistance to do that and advice on how to go about that would be available also from our discussions at CGAP, where we monitored EVO led a process specifically around the pandemic simplified due diligence developments. And Mehmet was also a key part of that. So happy to speak to that. And then just to open the door to the VASP discussion, bear in mind that there's also a VASP travel rule, and as was pointed out right at the beginning, the world is still struggling to implement the virtual asset service provider standards of FATF. This discussion runs parallel to that. In a sense, the hope was to improve the travel rule in relation to electronic payments to match that which has been provided for virtual asset service providers. But perhaps on VASP and crypto in the region, over to you, Mehmet.
Thanks a lot, Louis. Actually, you already mentioned about the virtual asset service providers and virtual asset sites. So recommendation 16, as you said, focused on the electronic payments and the value transfers, the wire transfers. But there's another recommendation. Recommendation 15 is focused on the crypto assets, crypto services, their service providers, etc. So now, as far as I remember, in the revisions, there's an exception. So basically, recommendation 15 and virtual asset side will be considered separately by FATF after the process. But it's important, as Louis mentioned, it's important to consider the alignment between the recommendations 15 and 16. And also, actually, one thing about the WASPs and virtual asset transactions. Actually, recently, Ivo, Louis, and I also discussed among us. So most of the peer-to-peer, person-to-person transactions related to crypto assets actually happening off-chain. It's not on blockchain. So, and most of the time there's this struggle of seeing the transaction or monitoring the transactions happening off-chain. So in this case, how the recommendation 16 will apply to this kind of off-chain transactions is another issue that needs to be discussed by the Secretariat. Thank you.
Thank you, Mehmet. Perhaps just a very short remark. You mentioned that crypto is particularly attractive because of foreign exchange challenges between the different economies. That was an issue identified in the Pacific, and not only that, also specific barriers that countries unnecessarily create, thereby forcing people to use other mechanisms. So one of the action plans in the Pacific is to vet the systems of the countries to determine to what extent those systems are actually enabling, and to address the barriers that countries create and that they are able to remove themselves, which would then remove the driver of people into crypto and other solutions that may then not be required. Thank you.
And thanks, Lee. One more addition from the chat function. This is, I think, important. It's from AFI, Alliance for Financial Inclusion, Mariam. So it's from Mariam. I'm not sure the participants in the room can see the chat function, but yeah, it would be great if someone covers that or reads that, or I can do that.
And I'm happy to read it as well. And then we'll move to questions from the room, because I do see this room filled with people taking notes. So I'm keen to see if there's any questions. But from Miriam, it says, to Luis's point on FDPs, we recently conducted AML TFPF sectoral risk assessments on FDPs with the Reserve Bank of Malawi and the Eswatini Ministry of Finance, and the findings and recommendations inform their national roadmaps to advance financial inclusion of FDPs. And happy to share with anyone that's also interested. Any reflections on that as well from the group?
I would like to help.
Everyone would like to have a copy. Understood. So we've unmuted Ms. Lisa Skinner and Mr. Floyd Theodore because of their questions had a level of complexity as well, but I'll read it out to the best of my ability. But before we do that, I want to understand if there's any questions for those in the room who are taking notes and also involved in the implications of this as it relates to Trinidad and Tobago. Okay.
Gold-plated approach that I just heard is an improvement over or a revision what would have prompted the revision for recommendations 1, 15, and 16?
Let me know if everyone heard that in the panel.
Shall I jump in? Very briefly. So recommendation 15, we just referenced, but there is no change to that. There's still a struggle to implement it in its current form. As a result, there's no appetite to change recommendation 15. Recommendation 1, dealing with a risk-based approach, what is on the table is a consideration whether slight changes to recommendation 1 may make it more attractive for countries to embrace the full risk-based approach by allowing simplified due diligence. We still have some countries that are resistant to that, and FATF would want to signal more clearly that simplified due diligence is very much part of the risk-based approach. So that's a positive development, but that is still under discussion, and it's going to depend on the nature of the proposed changes, whether they will have the appetite to make it now. That brings us to recommendation 16 that we've been discussing, and basically it's been a change in the marketplace and payments since 2001. And in the past 23 years, the market has totally reformed, but the rules have still remained the same. So recommendation 16 does need to be reformed. The question is just how best can that be done to update the requirements, but while preventing unintended negative consequences? I hope that answers the question. Thank you.
Any other questions, Jeanette?
Yes, thank you so much for that very interesting and enlightening presentation. But I'm sitting here and I'm saying, in particular with reference to your slides on data risk and I think the impact assessment, I wanted to add something to the mix with respect to a country having the appropriate legal framework to be able to, comply with such a recommendation. I mean, just for example, with respect to Trinidad and Tobago, our Data Protection Act, the entire Data Protection Act has not been passed. So then how do we implement something like this? And I'm sure it's going to be very similar to smaller states, Caribbean states of the Caribbean, etc. So, I mean, I'm not sure where do we stand with that. We do not have all of the facets of the act in place. So how do we drill down with that in terms of the data? And it's very, very granular based on what I'm seeing there. So.
Thank you so much for that question. You are not alone. There are many countries that still don't have privacy and data protection laws in place, and many that do now have it in place, but don't have the mechanisms yet to give effect to that. In this case, you will actually be in a better position to respond to such changes in recommendation 16 if it goes that way. The concern is not that it's going to compel you to adopt that law. The concern is that without the law and with standards such as these being put in place, your data as a country and your data of your consumers and your customers will be even more exposed, will be even more vulnerable. And the laws are there to provide protection. Without protection, that to the extent that it can be provided by the legal framework, there'll be even more exposure. And unfortunately, we are now living in a jungle. We are all exposed to data vultures from a variety of countries globally, and then our own organized crime syndicates. So there's a compelling reason to get as much protection in place, but then also for FATF standards to respect that, both the laws, but also the underlying principles relating to data protection. We need the standards and the general principles in our laws to be aligned. Thank you.
to anything, but this is a safe space. Ms. Net, did you have a further consideration? This is a safe space.
Not, I do not at this time.
I'm still, I mean,
And I just want to make clear, I don't want to come across as underestimating the complexity of what we have to put in place. But I also work on data protection, and I'm very worried about the level of threats that are being faced. Me personally as a consumer, but all of us. When our data, when our identity data is leaked and available, we are all vulnerable. And the time to protect it is running out. So I'm very much in favor of data minimization. And until our systems have matured at a national level globally, I think we need to be very careful to adopt standards that require more information to flow across borders. But that's a personal opinion from our side. Thank you.
I just want to add to
yes,
that.
please.
All of this with the increase in fraud, identity theft, et cetera, et cetera. So, it's a tough place to be.
So I'll just say an elephant in the room about this tough place to be as a neutral UN entity that, doesn't have too much to lose except for my credibility, maybe. So I do see this big conflict now with financial inclusion, the platform in which we're advocating for across the Caribbean. I think someone else mentioned this earlier in the chat. One of the biggest issues that has been preventing, for instance, MSMEs to increase their wealth generation, join the digital economy, be able to reach new streams of income through tourism, was their inability to meet some of the already due diligence requirements of the banks to get them into a bank account, for instance. And many of them are operating formally, and there's been a widespread effort to try to continue to look through the regulations as well as encourage the private sector to reduce these due diligence requirements, which were, at least before, over some of the old FATF guidance. But now it seems like that might actually reverse, that those types of efforts might have stability implications now on the country a bit, especially when the Data Privacy Acts, because I agree, Jeanette, knowing full well how complicated. I mean, in theory, these can be updated with some good research assessments, but in practice, when you get to the political aspects and the timelines and the actual consultations and everything, those acts and amendments to acts take a very, very, very long time. So it does seem like the rock in a hard place is almost an understatement. It almost seems like it's a conflict between financial inclusion and adherence to these rules, which continue and keep stability. And that's what also other people ask in the chat, with these limited risk assessments, which were being promoted. What is the guidance here from your perspective, from the perspective of CGAP and those on the calls? And are there any opportunities to influence FATF as well as it relates to small island developing states, especially because of their vulnerability and fragility to disasters or other implications? Thanks. No, that's a complicated question for everyone on the panel to answer.
So I'll go first. And use the benefit of first speaker to choose the easier part of the question and leave the complicated part to Louis and Mehmet. What can be done? I think it's very important that the discussion that we are having globally around the revisions is diverse and inclusive. I think that's really essential, because I don't think we cannot leave the recommendations, and I don't think we can leave the recommendations to be informed with very narrow set of experiences that may be coming from a certain markets that may not recognize the implications and consequences of some of these recommendations for different markets. That's a very complicated way to say that. It can't be just a few countries and large international players who determine the standards without really fully appreciating the consequences for for smaller markets, for island countries, for microfinance organizations, for fintech remittance players, and so on, because these standards then apply to everyone. And so I think that that is the responsibility we currently have when the consultations are ongoing, to bring those diverse experiences and help FATF and its members understand how those rules apply in a very different set of circumstances that they may not be aware of, frankly speaking. So I think that's really very important. That's why it's important to speak to your friends and family who are not in the room and not watching, to also pay attention to the current process that's happening. The other challenge that I see, which I don't have a good answer to, but it comes from, Helen, what you have been describing. While there's this recognized principle of complementarity that basically suggests that there is a synergic effect between integrity and financial inclusion objectives, at the same time, when you look at the risk-based approach and its implication, or the way it's been applied, there is inherent tension in that concept. Because once you start creating exemptions or simplified regimes, there is this natural tendency to compensate for those simplified regimes by imposing enhanced measures on the other side. So enhanced monitoring, for example, or simply creating a tiered KYC account where some people just get locked in the lowest tier and never really progress to the higher tiers. I don't think that was the intention of the risk-based approach, honestly. The intention was genuinely to allow people who are low or lower risk to benefit from the same suite of financial services as people who would go through so-called standard customer due diligence. But of course, the problem is that when you imply simplified due diligence or exemptions, they inevitably will eventually become exploited by criminals to a certain degree, because you create an appealing loophole in quotes, because it's not really a loophole, but you create incentives for criminals to exploit that area. Now I can open account for 1,000 people and start using those accounts to launder money. So there is this inherent tension that needs to be acknowledged. It also needs to be acknowledged that we will never really have 100% success ratio in either capturing or eliminating all the criminal proceeds going through the formal financial system. There always will be, and there's a significant amount of those proceeds that still go through that system. And just reflect as a society on what it is that we want to get, right? Do we want to get a system that is perfectly sheltered from criminal proceeds but serves a tiny portion of the population, or we want to have a system that may be flawed to a certain degree but is really inclusive and it helps people to have better lives, to grow their businesses, to send remittances to their families, and so on? I think that's really the fundamental question that we need to answer, and we need to help FATF answer in a way that serves the financial inclusion efforts. So that's my take on the relatively easier part of the question.
Thank you. Keynote speakers, thank you for dissecting the Travel Rule 60, coming up with some sort of solutions. I know we're pressed for time, but I really want to open the floor for just 5 minutes in terms of what our way forward. How can we work to help propel or implement this travel rule? Jeanette discussed some challenges, which is one of my main challenges, data protection, because I believe I was a victim of data theft, identity theft, and I'm still getting licks for it. And I wouldn't go too much into detail. And this was like 15 years ago, and it's affecting me, it's affecting my family, it's affecting my kids because of data theft. To get my name scratched out of whoever take my name is a pain, because the institution is not very open to changes, so to hear me out, right? So collectively,
No, sorry to interrupt. Shana, also another thing is that the public consultation from FATF is closed. But however, they're still taking and open to feedback from institutions and countries. So I think it would be very interesting because clearly we are scared now about these revisions. So it would be nice to hear from Luis and Mehmet and Ivo, who works with who can help us perhaps advocate for change. So what is it that we as a country, as Trinidad and Tobago and other islands in the Caribbean can do to influence these revisions at this point?
Thanks, Annie. So yes, as you said, FATF engaged actually with different stakeholders on Recommendation 16, and it held actually several rounds of private sector consultation to discuss with the revisions with the private sector, also with the public authorities, international organizations, etc. But the consultation is closed right now, but the Recommendation 16 is still in the draft form. So the process will continue, and you can see that statement on the recent LinkedIn post of the FATF president. There's still he says that the engagement is still possible. It's of course it's important for stakeholders, including regulators and authorities in the region, to collaborate, to closer look at the revisions and to find out what issues might be a problem for financial inclusion. So yeah, let me stop here because I know Ivo and Louis will add more.
I think very practically, it's important to understand FATF really wants to hear from you. They're really open. And if any mistakes are made, it would be because institutions have not sat up and really participated meaningfully. So they're looking for information about impact. They are concerned about costs, but I'm not seeing enough being done to quantify costs. Around the lay, around the address, how many people in a particular jurisdiction will be able to meet those requirements? That's the type of data that would be hugely helpful, because when you put that forward in a debate, that type of data has the tendency to swing the direction of the debate. So we need a rich discussion. This is going to impact so many lives around the world. It's worthwhile investing now a bit of time. Look at the old consultation document, work on that, because that was the starting point. And then we can await, there will be another consultation round with a new draft that will probably retain about 70% of the original one. So looking at the original one now will be helpful. And yes, of course, our doors are open. We're very happy to have discussions. I can hand over to Ivo, who's been creating a platform for discussion around this, because this is difficult for any individual institution or in any individual country to understand. This is probably one of the most challenging FATF standards, especially in conjunction with the virtual asset service provider standards. We're all trying to understand it better. So what we need is a collaborative discussion that can lead to a better understanding, better data collection, better hardcore arguments that can be put forward on behalf of the country, but also on behalf of the region. Thank you.
Yeah, great question. Thanks for that. So as Louis said, please reach out. There are many channels that Mehmet and Louis described, but also feel free to reach out. We're also happy to channel those experiences and opinions through the CGAP's participation in FATF working groups. So.
And I noticed on AFI is participating. We're in close contact with them. Digital Financial, I see Lisa Skinner. We're trying to build a broader group of like-minded organizations that can assist, but that can also help pool expertise in order to provide meaningful input into these processes. And we learn. I learn every time through engagement. So I appreciate it also because it helps me to better present a real life perspective that would also benefit your region and Trinidad and Tobago. Thank you.
So we can engage and discuss, but more practically, is it a letter from the central bank that is more powerful and required, or can it be just a letter from the UNCDF, or can it be the TTIFC? Like like how does that, do we influence better?
All of them count. And don't put the eggs in one basket. Send all three, send four, send five from different perspectives. And importantly, don't only speak to FATF. We've seen too many public consultations in the past where everyone worked in a silo. Also share it with us. Share it with the other partners who might also be working on their own submissions, because you inform the other submissions and we strengthen the joint inputs into the process as a whole.
And this time, let me add, and we are very lucky that FATF is not this time, as usual. FATF is very open to connect with the financial inclusion community and to get the feedback, actually.
Thank you for that. And one of the trigger questions I was going to ask is, how can we get assistance from CCAP and even the FATF? I mean, now that you all clarify, we could write, we could be in contact with you all. That is really reassuring. However, in terms of our call to action, during the seminar, I just jotted some notes that I think we can do as a body, right? And I thought that we can probably fast track and conduct the risk assessment. In terms of the leading agency for that, I think we need to come together to decide who will lead that function. I also think that we need to continue monitoring. If we have not been monitoring, start and continue monitoring and actually putting down what are the mitigation we can state for these risks. I'm hoping, I don't know if TTSEC can be the lead for the risk assessment. I don't know. I'm just throwing it out there. Maybe FIU being the monitoring agency. Again, we could sit together after this seminar and really collectively agree on the next steps. I also think regulations that's an area that we need to look at, and definitely legislation, particularly the Data Protection Act. I know Ministry of Digital Transformation, they are responsible for that particular act. Unfortunately, he's not here. I would have loved to hear what MDT and where they are at, the status of the app, so that we will know how we can, what is this we need to do to move it forward. And also the digital identifier, our national digital identifier, again from the MDT, what's the status, when we can look forward for something like this, because I think it's key for the proposed solutions. But these are my recommendations. Again, I really think that maybe in the next coming months, not even months, weeks, we could sit together. We can have the different regulatory bodies right here in the OFA, and we could discuss some next steps. So what do you all think? Sounds good?
Yeah.
Very good. Okay. So I would like to introduce Mr. Desmond Kramer, who would give the closing remarks. He is FST manager at the TTIFC, and we will close up from there.
So can I put all my talking point? No, so I could build quickly on what I said, or just throw a question in. What are some of your specific call to actions that you want to put in the session today?
Not have a proposal to not fall through, and we have the
Anybody else in the session? The reason why I'm asking is that normally you go to these sessions and you get a lot of information, go to highlight, and then you get this teaching, but no actionable items. Today, I think we have a lot of actionable items, particularly from today's session. Agree? So if I could just get 2 pilots first. Any two.
Just take the actionable items. So, but what I was going to discuss after was that I think there's a need for this body of persons gathered here today to speak with the National Anti-Money Laundering Committee because there is a committee that's cabinet appointed committee that has been established to deal with the national risk assessments of Trinidad and Tobago that captures different sectors. And those entities and individuals in that body is responsible for developing the national risk assessment of Trinidad and Tobago.
Right.
So not everybody is here today in relation to rights, in relation to that risk assessment. And that risk assessment will feed into any assessment that is being done in relation to recommendation 60. What's also missing, because you're speaking to small and medium enterprises. And if someone from the stock exchange was not invited, and they need to have a voice on this, because the stock exchange recently passed the SME rules, and they have amended those rules recently to start to encourage small and medium enterprises to be developed in Trinidad and for people to invest in these enterprises. So some of the rationales for the amendments can be taken into consideration, because there were only, since the development of those rules, there only had been 2 entities that bought into that system. Why is it that you only have 2 when you have so many small businesses coming out of Trinidad and Tobago? Why are they not looking at that avenue of investments in those businesses, and rather, but they have only gone out to the banks for loans and stuff like that. So stock exchange is an entity that may be missing, that you may want to consider speaking to in relation to financial inclusion for small and medium enterprises, and how is recommendation 16 affecting them, or the ability for that to widen the approach or the gap where there is a gap in terms of reaching those entities.
To make some good point, there's one thing I want to change, not you all, but we. Because people in this room, we are the ones that make the difference really, because they're actually moving the recommendations forward.
Yeah.
But I'm not sure if I should ask for another that kind of robust. But maybe I'll open up. So in terms of the individual organization, how do you see your organizations actually assisting or supporting your adoption of the recommendations today? And just to build on what Shania said and what Keisha said. Each entity here, those online and so on, have a role to play. And your role may vary based on your organization, your mandate, and so on. So a lot was said today, and a lot of rational analysis came out of what was said today. Shania went through it very succinctly in her recommendations moving forward. I really hope to see all of us back here at another session. You know that, Shania?
We will do. We have to make it up.
We need to make it happen. So our present panel today gave us a lot to take up. Anyone else have anything else you want to add, actionable item? This was a very, very informative session. Okay?
Yeah.
Trying to get you all into the last bit of the
The squeeze.
lay your meat for the food or something.
I can't believe.
I did want to also mention, because those in the room can't see the chat.
Right. We have people on chat.
Yes, but those in the room actually can't see the chat. And what I did want to mention for those in the room is that in the chat, there was a very loud call and the contact information to also advocate strongly based on all of the reactions here, since that is a big next step takeaway item. Advocate strongly your position and the contact information on the chat to get in touch with CGAP among the other partners that you can advocate with in order to further understand and also provide your position as well and implications. Yeah. Correct.
That is very important. And going back to Shania's point, who will actually lead this activity?
Yeah. Sure, what was some types of good sources of those?
So those are some of the things that we can take away from today's session to go with action and move forward. I don't want to be like a point and go through all what was said before. You actually touched on a lot of stuff that important to us. But I'd like to thank Ivor, Mehmet, and Dr. Coker, Professor Coker, sorry, for the informative session. Of course, those online, thank you for participating. Helen and her team from UNCDF. Team from TTSC, well done. It was a very informative session. And of course, before I close, I'd like to invite you all to refreshments. This next one.
Oh, it's here. It's here, it's within you.
So you have some refreshments.
And if I can also just give a special thanks to Edward, who did all of the organization and the
country notes.
Correct.
So thank you all for coming. And again, if I could just reiterate, a lot of what was said are actionable items. Not just the talk show that you're accustomed coming to. So it's something that is a term. But we really want to see something in terms of recommendation. I think 1 through 1, 15 and 16, those are the main ones, 16 in particular, that will deal with financial inclusion, low risk assessment, all of that. Those things are important to us. So familiarize yourselves. And then of course we'll reach out and see how best we could facilitate something like this again.
By lead agents. You can have a lead people. Maybe this community.
Yeah.
Yeah?
So before I close, thank you again. We have some refreshments.
Thanks,
Thank you for having us. Thank you all.
Bye.
Bye-bye.
Thank you so
Thank you,
much.
everyone. Bye-bye.
Thank you for
Bye-bye.
all the arrangements. We appreciate it.